Okay, let's unpack this. We're diving into trading charts today. Yeah. Specifically, trying to find those reliable signals in what can feel like a pretty wild and noisy market.
Mm-hmm.
And we've got some really interesting source material here to guide us through it.
Yeah, we do. And this material, it really zeroes in on a major challenge lots of traders run into.
Which is?
Well, there's this tendency, maybe especially when you're starting out, to just get completely sucked into the fast pace of short-term charts.
Like the 5-minute, 15-minute ones?
Exactly. Those, the thinking often goes more activity, more trades. That must mean more money.
Right. That constant buzz, that feeling like you have to be doing something all the time.
Mm-hmm. But the sources we're looking at, they argue this is, well, often just a trap.
A trap? How so?
It leads straight to things like overtrading, impulsive decisions, and, in the end, significant losses.
Yeah.
It's a direct quote from the material.
Yeah.
It's like getting lost in all the tiny wiggles and completely missing the bigger picture.
Okay, I see. Getting lost in the noise.
Exactly. And that's where the main focus of this deep dive really comes in, according to this material. The 4-hour chart.
The 4-hour, okay.
Yeah, it's described as an indispensable tool, but the sources also note it's often underestimated.
Indispensable, but underestimated. That's interesting. So our mission then, sort of drawing from what these sources want to give you, the listener, is to show why this 4-hour chart can offer a much more reliable view.
Yes, and also to highlight the real risks if you ignore these longer time frames.
Right, and maybe give you some conceptual tools based on this material to, well, sharpen your decisions, maybe cut down on that trading stress.
Mm-hmm. And optimize how you manage risk, which is huge.
Okay, and the goals here, as laid out in the sources?
They're pretty compelling. Things like improving the precision of your signals, drastically reducing that urge to overtrade.
Which sounds like a big one.
Huge. Optimizing risk management and, ultimately working towards boosting profitability in a more sustainable way, not just quick hits.
Okay, that definitely sounds like a mission worth exploring. Let's really dig into the source material then and see what it tells us about the specific advantages of looking at the market through this 4-hour lens.
Let's do it.
Okay, so point 1 from the sources seems to be all about filtering out the noise. Tell us about that.
Yeah, this is, you could argue, maybe the most critical point they make. They really emphasize that those short-term charts, the 1 hour, 15-minute, even 5-minute, they're just inherently full of what the sources call erratic fluctuations and transient movements.
Transient movements, right? Like just temporary blips.
Pretty much, often just caused by things like quick shifts in intraday liquidity or maybe some low-importance news popping up. Think of them as like tiny jitters on the chart that don't really mean much long-term.
So movements that aren't reflecting a real underlying shift in, say, supply and demand.
Precisely.
Right.
And the danger the sources warn is that these little jitters create false signals. You might see a tiny bounce and jump in thinking it's a rally, or a dip and panic sell, leading to impulsive and costly decisions, because you're just reacting to the noise, not the actual underlying current.
Okay, that makes sense. But the 4-hour chart, these sources claim, it acts differently.
Fundamentally differently, yeah. The material describes it as acting like a natural filter.
The filter.
Yeah, because it only shows you the price action in these larger 4-hour blocks. It effectively smooths the price action. It irons out those tiny, meaningless wiggles and reveals underlying trends with greater clarity.
Ah, okay. So you're stepping back, you're seeing the bigger pattern, the forest, instead of just the trees.
Exactly that. It lets you see much more clearly if the market truly has a sustained bullish or bearish trend going, or if it's just sort of chopping around, consolidating, or temporarily bouncing inside a bigger range. You see the main flow.
Got it. And that filtering, I imagine that leads right into the second advantage the sources talk about, getting more reliable signals and identifying key levels.
It does. It builds directly on that. The sources state very clearly that the important market signals and levels you spot on a 4-hour chart, they are significantly more reliable and respected by the market overall.
What kind of signals are we talking about here?
Well, things like specific candlestick formations, those patterns made by the open, high, low close within that 4-hour bar, and also bigger chart patterns, things like head and shoulders or double tops and double bottoms, those classic shapes that can suggest a trend might be changing.
Okay. So the argument is basically when you see one of these patterns form on a 4-hour chart, it just carries more weight than seeing the same thing on, say, a 15-minute chart.
Significantly more weight, according to this material. Yeah, they give a really good example, a resistance breakout. So price breaking above a level it struggled with before. When that happens on a 4-hour chart, the sources say it indicates much greater conviction by large market participants, the big players, the smart money, than if that same breakout happened on a 30-minute chart. These bigger players often operate on these higher time frames.
Okay, that's a powerful point. It's not just that a signal happens, but the time frame it happens on gives it credibility.
Exactly. And the result, as these sources explain it, is that the entry and exit points you identify using the 4-hour chart tend to be more robust.
Meaning?
Meaning they're less prone to immediate reversals, less likely to be those annoying fake outs where the price just whips right back.
Okay, that makes a lot of sense. And this connects nicely, I think, to the third point from the sources. Using the 4-hour chart to get that medium-term context for your actual trading decisions, because trading isn't just about one time frame in isolation, is it?
Oh, absolutely not. No. The sources really position the 4-hour chart as the perfect bridge. Yeah, it connects your long-term analysis, like maybe looking at daily or weekly charts to figure out the main direction. The big trend, it connects that with your short-term execution, using maybe a 1-hour or 30-minute chart to find that really precise entry point.
And what's really interesting there, it seems, is how understanding the story the 4-hour chart is telling lets you adjust your tactics on those faster charts.
Exactly right. The sources use a great example. Let's say your 4-hour chart is clearly showing a strong uptrend.
Okay.
Well, then your focus on the smaller charts tactically should be almost entirely on looking for buying opportunities on retracements, those little pullbacks against the main uptrend.
Instead of trying to short it or fight the main flow.
Precisely. You're not trying to trade against that bigger 4-hour current. It makes sure your short-term actions are actually aligned with where the medium-term momentum is going.
That sounds like a much more, disciplined and strategic way to approach it. And speaking of strategy, how does this time frame help with managing risk and reward? That's point 4 in the material.
Yeah, this is crucial. The sources argue that operating with this 4-hour perspective, it lets you set more logical and effective stop loss and take profit points.
Okay, why is that? Why more logical?
Well, think back to those short-term fluctuations, the noise we talked about.
Right.
Those little wiggles are much less likely to prematurely trigger a stop loss that you've placed based on the structure seen on the 4-hour chart.
So a stop loss being the order to get you out if the trade goes against you.
Exactly, limits your loss.
No.
By basing it on the 4-hour view, you're essentially giving your trade more room to breathe to ride out that normal market noise without getting knocked out unnecessarily.
Okay, that makes sense. And on the flip side, the profit side.
Well, the potential profit opportunities, or your take profit points, they're often targeting greater price moves, according to the sources.
Bigger moves.
Yeah, because you're aiming to capture those broader and sustained price movements that the 4-hour chart helps you identify, not just tiny little scalps.
And critically, putting those two together, less chance of getting stopped out by noise, plus targeting bigger potential gains that significantly improves your overall risk-reward ratio, doesn't it?
Absolutely. And the sources correctly point out that this ratio, comparing what you risk to what you potentially gain, is just fundamental, absolutely critical for achieving long-term profitability.
Yeah, you hear that all the time.
It's about making sure that when you are right, and you will be wrong sometimes, but when you're right, the wins are substantial enough to more than cover those inevitable smaller losses.
Makes perfect sense. Okay, finally, the fifth advantage the sources highlight: fostering patience and discipline. This sounds like it gets right to the heart of the psychological side of trading.
It really does. The sources explicitly call overtrading, that constant need to be in a trade, one of the biggest traps for traders.
I can imagine. I feel like you should always be doing something.
And the 4-hour chart approach, it directly combats this.
How does it do that?
Well, just by its nature, it involves reducing signal frequency. You simply don't get potential trade setups popping up every 5 minutes.
Right.
You have to wait for a full 4-hour candle to close, wait for a significant pattern to actually complete, wait for a key level to be properly tested, and either hold or break on this time frame. And that waiting period, the sources argue, actively fosters patience and discipline.
So it kind of forces a shift in your mindset. You can't just react all the time.
Precisely. Instead of, as the sources put it, reacting compulsively to every tick on a tiny chart, the trader learns to become much more selective.
Selective.
Yeah. You wait patiently for what the sources call high probability setups. Those really clear signals that line up with the main trend and the key levels you've identified on that reliable 4-hour chart. It's a conscious decision to go for quality over quantity in your trading.
Okay, so the advantages laid out here are pretty clear, pretty compelling. Filtering noise, more reliable signals, getting that crucial context, better risk management, and building patience. But the material is also quite realistic, isn't it? It points out that just switching to the 4 hour isn't magic. It comes with its own challenges.
Yeah, absolutely. The sources are very upfront about their hurdles. Let's look at those.
Okay, what's the first challenge?
Well, no surprise, it's patience. We just talked about how the chart helps build it. But developing that patience initially, waiting for those better but less frequent setups, especially if you're used to constant action, that takes strong mental discipline. It can feel really slow at first.
Yeah, I can see that being a real adjustment, a different gear. And closely related, I guess, is discipline.
Definitely. It's about avoiding that temptation, that urge to just, jump down to the 15-minute chart when the 4 hour looks quiet.
Ah, because you want some action.
Exactly. Sticking to your plan, sticking to your analysis based only on that higher time frame view, even when it's slow, that requires ongoing active discipline. That impulse to find something to trade is strong.
I can absolutely see that being a struggle for many. What about the practical stuff, like time management? Is it less demanding?
It is less demanding than, say, watching tick charts all day, for
Yeah.
sure. But the sources do note it still needs regular monitoring.
How regular?
Specifically, checking the charts every 4 hours when a new candle closes. You need to look for any new setups forming or check if price has reached a key level. So while not constant, it can still be tricky if you have a really busy or unpredictable schedule.
So it's not totally passive, just a different rhythm of engagement. Okay.
Yeah.
And then there's what the sources call the mindset shift. What's that about?
This is framed as a really significant change. It's about moving away from judging your trading success by the number of trades you take.
Right, that busy equals productive idea.
Exactly. And moving towards defining success by the quality and the outcome of the fewer, higher conviction trades you take based on that solid 4 hour analysis. It means fundamentally adjusting how you even think about success and activity in the market.
That sounds like a deep shift. And lastly, building confidence.
Yeah, learning to actually trust the signals you see on the 4 hour chart, and maybe more importantly, trust them more than those potentially misleading signals flickering on the shorter time frames. That just takes time and experience.
You have to see it work.
Pretty much. It's a process. You
Yeah.
need to see these setups play out, maybe test it in a demo account first before you really feel confident putting real capital on the line based on them.
Right. And the sources seem to stress that actually navigating these challenges, overcoming them, isn't just, a nice to have. It's described as a fundamental step towards more mature and successful trading.
It really is. It's seen as part of that evolution, moving past those common beginner pitfalls.
Okay. So if we were to pull together the main takeaway from all the source material we've looked at, it seems the 4 hour chart isn't just like another time frame option you could use. It's presented more as an essential component for any trader seeking consistency and long-term profitability.
That's a great summary. The analogy they use in the material is quite striking, actually.
Oh, yeah.
They say ignoring the perspective the 4 hour chart gives you is like trying to navigate open sea without a reliable map,
Wow. Okay.
just leaving you exposed to unpredictable currents and frustration,
Yeah.
basically just reacting blindly to every wave that hits you.
Whereas operating with this perspective, using the 4 hour as a core part of your analysis,
Yeah.
the sources suggest it offers a clearer view of what the market's really trying to do.
A clearer view leading to more informed decisions based on those more reliable signals.
And it helps reduce trading stress by cutting out some of that noise and the urge to overtrade.
Exactly. And the conclusion from the sources is that all this significantly increases your chances of success over the long haul.
So it's really the difference between trading blindly, just hoping for the best.
Yeah, versus trading with a strategic vision, grounded in clearer, more reliable market signals.
Okay. And that strategic vision, as we've really hammered home based on the sources, puts a huge emphasis on things like patience, discipline, and shifting your mindset towards quality over quantity. So thinking about that, given this deep dive into patience, discipline, and a quality-focused mindset for trading, how might those same principles, the ones highlighted for using the 4 hour chart effectively, apply not just in the markets, but maybe to developing mastery or making thoughtful, high-conviction decisions in, well, any complex, dynamic environment you might face? Something for you to think about.